Hello everyone, welcome to the IchimokuCharts.com daily analysis for the SP 500 for Monday, November the 15th, 2010. Well, the market continues in its downtrend today. Today we had, in bar chart terms, an inside day. The previous day's candle was a candle with a lower high and a lower low, so the downtrend continued. Today's trend didn't change the trend, so the previous trend is in force. Now, we have a small red body candle today, which is quite different than the previous day's candle. The previous day's candle was a much larger red body. And today's small red body tells us that even though the sellers made some net bearish progress, it certainly wasn't anything in comparison to the previous day's trading. So that may be significant for continuation of the trend to the downside. It suggests that the bears aren't really following through. Now, the fact that they failed to take out the low of the previous candle also may be significant. The market is interacting with an area of previous support and resistance, and we can see from these candles here the large shadows on the top here where there was good downside price rejection, and on the candle from the previous day's trading we had upside price rejection coming in the same area, so buying coming in. The market failed to test that right at that level for today's trading, so that could be important. Now, the market is trading around the 1200 region, a round number, and round numbers tend to be significant areas of major support or resistance, so there is a chance that the market will not trade through this region fairly quickly. We also have a large shadow on the top of the candle, and that tells us that even though the sellers aren't necessarily supporting this market between the open and the close, there's not a lot of net bearish progress. The bulls actually lost commitment. So as the bulls were attempting to trade the market up towards its highs and attempting to test the high of the previous day's candle, they lost commitment, and the sellers came in and overpowered them. Now, for the bears, though, they did close the market pretty much at the low for today's trading. So they did close the market in control on the whole day's trading. And on the whole day's trading, the bears actually showed a lot more commitment to taking the market lower than the bulls for the trading throughout the day. Now, just looking at the Ichimoku indicators, we are still trading up above the clouds, so we do have a market with an overall positive bias, and the market is obviously retracing this major second-time uptrend that the market's been in for quite some time. The market is also trading up above the Kijun-sen, which means that it's bullish in the medium-term time frame, but it's very close to the Kijun-sen, trading very close to there, so the market is almost quite neutral in the medium-term time frame. The market is trading down below the Tenkan-sen, and if we look back here, it's been quite some time since the market did trade down below the Tenkan-sen. The previous day's trading, so this is the second day in a row that we've closed down below there. We did test just below that region previously here a few weeks ago, and then we did test just below a few weeks prior to that. So we've had two closes down below. It's been a while since we've seen that. There could be follow through to the downside because of that. Now, as I said, though, because the market hasn't taken out the previous low, then we do need to consider whether or how bearish the market really is. If the market does continue trading down, though, we will have the market interacting with the Kijun-sen, and that is likely to be an area of potential support for the market. Now, we can see here previously that it's been a while before the market interacted with the Kijun-sen. So that could be significant for this market, considering that the market hasn't traded so close to the Kijun-sen for quite a long time. It could tell us that the market is losing quite a lot of momentum relative to the manner in which it was trading over the last few months or so. Obviously, we need to watch the Kijun-sen, as I said, trading around 1191.4, which coincides with this zone of previous support and resistance. And down below there, we have quite a few strong areas of support: 1183, 1183, 1179, 1173, and some of these other swing lows that we can see that are around these areas where we've highlighted with a line. But support and resistance acts in zones, so we've got a lot of areas down through here where we could find potentially strong support. If the market does trade all the way down through there, then we have potential resistance from the cloud coming in at the moment, probably around 1140. And then as the market continues trading, that support will be moving up to meet the market if the market doesn't retrace back to there quickly. Now, to the upside, obviously the high of the current candle is important because that was where the market was rejected from today. So we should be looking to that area. If the market takes that out in a bullish way, then there's a good possibility that the market will test 12.19 and just above it, the swing highs around roughly 12.27. So for the next day's trading, watch the high of the current candle around 12.07 and the low of the current candle and the previous low roughly from about 11.97, 11.94 down to 11.91 should be good solid support for this market.